Hi everyone, welcome back to Upside Down Data. Today I want to talk about whether or not Bitcoin is disrespecting cost bases and what might be driving the selling that we're seeing right now. If you like the content, remember to subscribe to the channel, give the video a like, and follow us on Twitter, where we put out regular updates about our risk indicators and more. So today I want to talk about various different on-chain metrics that I think are showing some very interesting things right now. But I want to start just with the Bitcoin chart and just look at one metric here that's going to be relevant to what we're going to talk about in a minute. So obviously with Bitcoin, we had that massive capitulation on the heels of the Luna UST drawdown, and we ended up, at least for now, bottoming out at 25K. Now, one thing that's a little bit interesting about this whole development and the fact that we're still kind of hanging out in this general price range is going into that capitulation. A lot of us were looking at this and saying that there wasn't a lot of technical support underneath those levels. Before we fell down here and have now traded a bunch of volume down here, the volume profile through here, which is basically just visualizing where has the volume transacted, so at what price range has different, basically what's the distribution of volume at different price levels is basically what this is visualizing here. And what we had noted back then was that really there wasn't much that was sitting below kind of the low 30K range. There was kind of this void until you went way further down, until closer to 20K or lower, before you started seeing any volume pop up. So a lot of people were talking about, before this capitulation happened, was that if this capitulation does happen, there's not a whole lot of technical support in the way. And the reason we said that was this idea of cost bases being important. One of the things with markets in terms of support and resistance is oftentimes people's cost basis will act as either as support if the price is falling down towards it, or as resistance as price rises towards it. And the reason is, basically psychological in a lot of ways, that people, if they see price coming back to what they paid for it, they might either see that as a relative value zone, be willing to step in to try to defend it, or if the price is coming up and meeting their cost basis, they might then take that as the opportunity to exit the market and just get out with what they had, pocket a zero loss, kind of break even and get out of the market if they've just been enduring that pain. And there's also psychological theories that suggest that people should be especially sensitive to price movements as they near someone's cost basis. This is prospect theory. It's this idea, the closer you get to that break-even point, the more enjoyable gains are and the more painful losses are right when you're around there on a relative basis. Movement of $10, or in the case of Bitcoin, let's say movement of $1,000 down towards your cost basis is going to be more noticeable than if you are sitting in 3x profit and the price moves $1,000 down towards you. You're probably not going to care as much. So this is very interesting that we found support at this level when there was very little technical support from a volume profile perspective. But it wasn't just merely the volume profile that had us thinking this could happen. We also looked at on-chain data. So here we're looking at chain exposed, which has some great metrics that let us visualize the distribution of coins and also break it down by age. So what I've done on this chart here is I've excluded everything younger than a month. The idea being that all of this stuff has just been bought very recently, and so it's probably not the case that we were coming back down to any of those cost bases. These are much more newer coins. So I'm doing it with kind of coins that are a little bit older than that, where someone would have had time to sit on it and then reflect as price was moving around. And so again, the volume profile though that we saw here back before this big capitulation, there's really nothing in terms of the realized price of coins down here. So what this is visualizing is where people's cost bases are. Basically, it's showing realized price, and the idea is that when someone sold or moved a coin at this price level, someone else must have bought it at that level. That would be their cost basis. So you can think of this as the amount of cost basis, the amount of coins sitting at different levels in terms of the cost basis. And what we had noticed back then was that there was really nothing sitting below, kind of the low 30Ks, all the way till down at around this 20K level. Very few people who are sitting with cost bases in this level. So what we thought then at the time was that if price were to break below kind of the low 30K range, there'd be very little to stop it until it got down to those deep, very low 20K ranges from a cost basis perspective, because so few coins had the realized price there. And this made sense when you just looked at how fast we ran up through those price levels. There just wasn't a whole lot of time for people to acquire cost bases in this area to buy a lot of coins down here, because, you know, we broke off from 20K all the way up to 40K so quickly that very few coins had the opportunity to really be changing hands in that level. Whereas if you compare that to something like 30K, just look at all the opportunities in the 30K range that people had to buy Bitcoin. So looking at that perspective, that was one of the things that we thought there shouldn't be a whole lot of support. So it's interesting then that Bitcoin has caught itself, at least for now, in that kind of no man's land, where there wasn't a lot of support from this just volume profile perspective down there. And there wasn't really a lot of support either from just a cost basis perspective. So it seems like there might have been some other reason why Bitcoin got caught at that range. You know, maybe one possibility is that other people were looking at these exact same metrics and they were thinking, okay, everyone else is going to wait till 20K to start buying because that's where they think price is inevitably going to go. I'm going to front run that a little bit to make sure that I can actually get in before a potential reversal. And it becomes a game theory kind of issue that if you think everyone else might try to front run, you need to figure out of what the actual value is going to be. You know, where are the majority of people actually going to step in and start buying? So it's possible that the upper 20Ks just kind of generally ended up being that value zone for a lot of market participants who were then willing to step in and buy coins at those levels. And indeed, we saw a pretty massive volume step in as we got down to those low levels, with the highest volume on the day being this wick all the way down into the 25K range. And so again, it seems to suggest that a lot of market participants were willing to step in to buy up coins as they went down to those levels. And again, that might just be one of those things. Also, you can think of 25K potentially having psychological significance. You know, it's kind of a round number, a quarter of a way to 100K. That can also play a role in support, that people will just see levels like that as being more important or more interesting. So that can also play a role as well. But I do just think it's notable that we've done that. Now, it doesn't guarantee that we won't eventually fall down to these lower levels, right? You know, I think one thing that's also interesting to look at is the Bitcoin realized price for long-term holders. So long-term holders are known to be kind of a cohort that are less likely to be spending their coins. You know, short-term holders are constantly kind of moving in and out, but long-term holders tend to kind of stick with it. They're probabilistically less likely to be spending their coins than, you know, short-term holders, or considerably less likely, actually. It's quite a massive drop down in probability from short-term to long-term, which is why this distinction is often treated as useful. And oftentimes this is around the 140 to 150 day mark, that if you've been holding Bitcoin for that period or longer, you're considered a long-term holder, statistically much less likely to be spending. And I think what's interesting to note here is just how price interacts with this level. Because we have seen in prior bear markets, Bitcoin seem to catch itself at levels that are considerably higher than can consider this the average cost basis of long-term holders. You know, we saw this back in the bear market going into 2015. You know, Bitcoin kind of caught itself for a while, had a bear market rally, caught itself again, little mini rally before the capitulation. That was in 2018, multiple times, Bitcoin kind of catching itself, be able to put in reversals, and then really holding itself up for a long time at the 6K range before the ultimate capitulation. You can also see in this move down from the 2019 highs, Bitcoin kind of caught itself, was able to start moving back up. We had the March 2020 crash where it went down and retested the long-term holder realized price before moving back up. You know, in the summer of 21, we caught ourselves, you know, well above where the realized, or the long-term holder realized price was then. And back here, you can imagine there probably were very few coins who had cost bases down in this level, because just, again, we moved up so quickly through here that really this was the first time we're really retesting those levels since here. And, you know, there was just so little time that was spent at these price levels that you can imagine that this kind of chart that we're looking at here would have looked very, very scary from someone when we were going back down in the summer testing these levels here, because it would have looked like just a void until you got down again to around the 20K range. But yet Bitcoin caught itself. And so that's one reason, oops, this is the wrong real-time holder. This is one reason why I can be a little bit dubious to kind of be too deterministic about where price is going to go based on this. You know, it's a kind of a questionable analysis. It's a questionable exercise to say that because there's no cost basis down here, it means that price is guaranteed to just slice all the way back down. Certainly it's something that's possible, and becomes more possible the less cost basis is down there. But you can't be too definitive about that, because certainly it doesn't always happen. And then, you know, there can be nice rallies that can happen off of it. But if we do look back on Bitcoin's history, you know, in bear markets, this is not uncommon for us to kind of be putting in these kind of steps before an ultimate capitulation. And so that is something that we have to keep in mind, that that could certainly be in the cards that could lead to that. Now, what are some things that could potentially make that more likely? Well, one of the things that can make that more likely is if you suddenly get a lot of long-term holders capitulating, right? If you get a lot of these long-term holders who've been holding from all the way back down here, deciding that they're just going to throw in the towel, that's not worth risking waiting for higher prices, they're just going to go ahead and take profits here. That can add a lot of selling pressure that can drive price down, because again, normally big long-term holders are very probabilistically unlikely to be spending. They're kind of, as a group, hesitant to spend. So suddenly a bunch of them all jump in and start dumping their Bitcoin. That can be this kind of new amount of supply that's unlocked and dumped onto the market that isn't usually in play in more normal market conditions. Or at the very least, you know, the way it usually works is long-term holders wait until you're in these big parabolic runs before they start unloading their coins. So one way that we can look at this is just to visualize who's actually been spending their coins more recently. And so what I'm showing you here is this metric called sell bubbles. And basically what it does is lets us visualize where are the coins that are currently that have been spent in the last 30 days. So where do they exist on chain? The idea being, you know, at what price levels, at what points of time were they bought? So it's a nice way of just visualizing who's actually been selling. Is it the people who've been holding for quite a while? You know, this goes back all the way into 2018. You see only a few people have been selling out of these lows back here, or from the lows of the March 2020 crash. Very few relative to the majority of the coins have been sold in the last 30 days into that, you know, that capitulation and sense, have really been people who either have bought very recently, so short-term holders. You'll see this huge cluster around people who've just only very recently bought, and again, they're very likely to be kind of moving in and out of the market. But also what we're seeing is that the people who are leaving are more so the long-term holders. So of the long-term holders who are leaving, it's more so the people who bought either at this kind of phase of the 2020-2021 run, or at the top of that run here. A few people from the summer, and then a few people back from the all-time highs who would have now, back in this range, started to age into the long-term holder cohort. But it's really these people. So of the long-term holders who are selling, it's not the people who've been holding on for a while. It's really the people, again, who either been sitting on, you know, has seen price move back to their cost basis and now fall away from it again, who might have, again, experienced that as more painfully, or the people who have been buying it at the top, or these people here for whom they'd held for a while, seen price twice rise well above their cost basis and now capitulate below, where, again, because it's so close to the cost basis, they might have experienced this drop below more painfully and then capitulated out. So to the degree that they, you know, maybe they even did step in to some degree and also try to defend their cost basis back here, but they're also, those people were selling. We can also visualize this with a different metric. This shows the shifts in realized price. And essentially what we can look at here is basically just visualizing at what price levels have coins bought at, you know, for example, 40K. These were short-term holders who sold into this new supply of short-term holders. So it's basically showing the movement of short-term holder supply. So the dotted red lines are reduction in short-term holder supply. So these are people who sold, and these are the short-term holders who bought. We can also see long-term holders who sold. That's these blue dotted lines. So again, these people here are these people up through here who we can see who have sold into these levels in the more recent time. But we can also see some people back around kind of the 50K range who have aged into the long-term holder bracket. So those would be people who didn't sell from kind of these general ranges, who have now aged in to that long-term. It was actually be more of this level here, who have now aged into the long-term holder cohort. So if we take this together, I think it's some interesting things that we can think about in terms of who's been selling and what cost basis has been doing. And so far, what we're seeing is that it doesn't seem like cost basis has been the driving thing that's led to support at these levels necessarily. Or at the very least, it wasn't the pure cost basis. Maybe it was front running, people thinking that, you know, expecting other people to expect lower prices, so therefore they want to make sure to get in beforehand so that they don't miss the boat. Or, you know, who knows? Or it could be psychological support at things like 25K, etc. You know, who knows? New market participants who see you know, those levels as being value. But it's certainly not just a pure exercise of people defending their cost basis, because we would have then expected price to probably slice all the way down to around the 20K range, at least, before we would have seen something like that happen. But even though that's the case, and there might not be kind of this volume or cost basis support that we might often look at as being as something, a price range we might identify as being strong support, quote unquote. It is the case, though, that sometimes, you know, Bitcoin doesn't necessarily need to do that to be able to put up rallies. You know, it was nowhere near the long-term holder cost basis. There really wasn't much cost basis here in the summer of 21 before we put in a rally. So, you know, it's just one thing to keep an eye on. It's not going to be determining what happens. So going forward, then, what I'm personally going to be looking for is how does price interact at its current level, right? And what happens if we do end up moving closer to the long-term holder cost basis? Because if we do start seeing price move down, that's where a capitulation like this could happen, where if there's not enough defense at that level to hold it, like what happened in the March 2020 crash, that can actually lead people to start experiencing loss for the first time in a long time. You know, the people who would be experiencing loss down at these levels have been holding all the way from back here. That'd be incredibly painful potentially, and that's what can fuel some of this capitulation, where some of those people end up getting out, dump their coins, leads to price dropping below the long-term holder realized price. And that actually has oftentimes been the bottom of bear markets. So again, doesn't mean that this time has to be exactly the same, that we're going to necessarily get this capitulation. But if price shows weakness again, we fall back towards it, that's something that we definitely can't rule out. Now, what I'd be looking for to see this not turn into something like, you know, this period back here would be if there be signs of easing in the more macro conditions. That's my kind of current thesis. That I think if the macro picture starts looking more rosy, then I think it becomes less likely that we are to just replay these kind of scenarios that we've seen in the past. And maybe we can stage something more like we saw up here, where we don't have to go back to the long-term holder cost basis to move up. But I just think this is interesting price action that Bitcoin is playing. That really, the support we found right now doesn't seem to be coming from, you know, volume profiles. It doesn't seem to be coming from cost bases necessarily. It seems to potentially be some other factors. And whether it will hold will be a very interesting thing to watch. And if we do start seeing weakness, you know, be careful is what I'm, or for, you know, not financial advice, obviously, do whatever you want. I'm going to be careful if that happens. All right, if you like the content, remember to subscribe to the channel, give the video a like, and follow us on Twitter. But a lot of updates about indicators and more over there.